Season, so let's get chatting with another corporate on our radar right now. We have Anant Raj Industries. Reported a good set of earnings with a solid growth of almost 24% in their revenues. We did see the company's net profit increase by about 13.5% as well. The stock doing half decently with a gain of about half odd percent. We have with us Amit Sareen, who's the MD of the company, joining in now. Thanks a lot, Amit, for joining in. For real estate companies, it isn't really the reported numbers that matter. It's the bookings and collections that matter over a period of time, and also the strength of the balance sheet. Let's start with that itself. Your net debt as of now, as we look at your balance sheet, is close to around 830 odd crores. It has halved from 1600 crore levels earlier. When do you intend to be net debt free by, and what's the roadmap there?
If you see the rate of the company, if you see the turnover, our turnover last year was 250, last year was 500, and this year we've crossed 1,000. In fact, the exact turnover is 1,004. And the profit this year has gone up 3 times. We have closed at a profit of 151 crores against 54 crores, which we had done last year. So, and whatever liquidity is coming into the company is going for majorly 2 basic things: reduction of debt and the data center business, which the company is now focusing on. So the debt, as you see, has gone to half in less than 2 years. And I think by the next 2 years, we should be going back to a zero debt company, which Anant Raj originally was in 2012.
So by FY25 is what you're saying, in the next 2 years. So is that your deadline? Because earlier I think you had mentioned FY24, I think, that you would become debt free.
Sonia, definitely before that, but just keeping a buffer in for a few months. But definitely before that, yes.
Okay, that's on the debt. I just want to question you also on the demand. Can you tell us what percentage of your business comes from the premium end? And what is the unsold inventory in the premium end of the business? And are you seeing a big pickup in demand over there? Because we've got signs of, really strong demand, especially from the likes of DLF, Godrej, etc.
Definitely, Sonia. Our main focus right now is a very prime sector, which we are focusing on, is the Sector 63A, where we have this township in which we've been working for the past 10 years. It's called Anant Raj Estates. And the last 2 years, as we all know, that after COVID, the way the real estate demand has come back, especially in Gurgaon area. And we are right next to where DLF has launched their project, which is doing very well. So we are getting all the benefits which we can from that launch also. Plus, in our sector, we have a joint venture with Birlas, which is called Navya Birla, which is a joint venture between Anant Raj Limited and Birla Estates. That is doing well. In this sector itself, we last year, on the birthday of our founder chairman, we launched Ashok Estates, which is a part of Anant Raj Estates, which is the main contributor for our revenue this year. So these 3 things put together, that's what helped us cross turnover, double our turnover, and from 500 a straight jump to 1,000. So right now we are in the premium segment. We still have a very decent inventory for us for the next, we are within this sector, we are sorted for the next 5 to 6 years. So we are focusing here, and this is what is going to help us reduce our debt.
Okay. Your data center is what I'm more interested in, because you have 3 projects which are coming up in the data center. That's what you've indicated in your presentation. How much did you make in terms of money from your data center projects this quarter? And what are you projecting going into FY24?
See, I'll tell you, data centers, a company is sitting on 3 ready assets, which are meant for data centers. For the first asset, which is in Manesar, where we have our first 3 megawatts up and running now. In fact, that only started in March. So the revenues from data centers are going to kick in from this financial year. So, and the company has invested close to 140 crores in this business for its first setup. The first approval we have is for 21 megawatts, which is already there with us. We have 2 tie-ups, one with TCIL, one with RailTel, to get clients. We are already on it now. So Manesar is now up and running. The 21 megawatts is going to be up and running this year. And the total capacity of Manesar alone is about 50 megawatts. So the company has done with the strengthening part of this. And now the execution of, we are going up to the rack. So the 3 megawatts racks are already there, and our servers have started to come in. So revenues will start coming in from this financial year.
How much does one generate typically from 1 megawatt? I'm just trying to understand, the monetization.
Mangalam, the generation from 1 megawatt is close to anything between 85 to 90 lakhs per megawatt per month.
Okay. Just wanted to understand a couple of things, with regards to your business itself. Your Apollo deal, I mean, you had a deal with them to get 2,000 crores via debentures. They've given you the first tranche of 200 odd crores. When do the next tranches come? And you intend to be debt-free, but debentures is also, classified as debt itself. So just wanted to understand this.
No, I totally agree. See, I'll totally agree with you. See, the deal with Apollo, this is Apollo US, as you know. So this is a beginning of a very big relationship with them, and it had to start somewhere. So what we did was we took this and we repaid our previous debt. So our relationship with Apollo has kicked in. In fact, we today are sitting on a sanction which we are not availing of, and it is only going to be done if we need the money. As you know, that the company last year has invested close to 140 crores in this data center business, all from internal sources. In spite of that, the debt has gone down. So you know why, Sonia, I took the extra few months we have taken is basically because the data center we don't want to stop at any point. And as now we see a very robust demand in data centers, in the coming few months. And as you know, we are one of the first ones in North India to kick into this business, and we've been working on this since 2019. And now we are very, happy that the first trench is the first segment is first phase, is already up and running, and the next will follow. Right now we have 3. This 3 will go to 6 by September.
Okay, so 6...
and all from internal sources, not using any debt from anywhere.
Okay. And can you tell us another opportunity maybe could be in the commercial segment for you? Because you spoke about data centers, spoke about residential, but on the commercial side, over the next 2 to 3 years, what would you be looking at?
So yeah, commercial is now picking up, and our rents have gone up by about 15% in the last financial year. So we see decent demand in commercial, but the residential demand is phenomenal. So commercial, we still have a lot of ready space, which we are going to first fill up and then move on to further doing commercial.
Okay.
And how much is the ready space that you have?
Right now, we are close to almost about 3 million of ready space, but a part of this 3 million will now move towards data centers.
Okay, Amit, just before we let you go, in August 2022, there was a rating agency report, I think Infomerics, which had migrated your rating to issuer not cooperating due to non-submission of information. Can you just clarify what exactly happened there? Has that issue been solved? What are your current ratings from rating agencies, and who exactly
that
has
was a
rated
technical, see, I'll tell you, that was a technical issue. As you know, that Anantraj Limited went through a demerger, and this demerger was approved by the Honorable NCLT in the August 2020. So after that, everything got sorted. This non-cooperation thing was done for the financial year 2017-18. That is the time when the demerger was going on, demerger, was because of the demerger this happened. And now, once the demerger got behind us, we have already furnished whatever information we had to. And in fact, we are now in talks with the rating agencies. And I think in the next few months, you will see the new rating coming up.
Okay, all right. So that issue stands clarified. Amit, thank you very much for joining in and speaking with us. So
Thank you.
Anantraj talking about a whole host of projects that they have coming on stream. We need to take a short break now, but we'll get you more on the markets. A lot of stocks in focus, especially on account of earnings. All that on the other side. Stay tuned.